All right, I did not update the date, so forgive me. I forgot to do that part of it. And I got two screens. This is not confusing at all. Here we go. All right, so let's start off with some wins. Who's got a win over the last week? I knew you knew I was looking right at you.
I've had two pendings.
Two pendings? Nice, good job. All right, who else has got a win? Let's get one on this side of the room.
I got pending with Jamie.
There you go. Heck yeah. All right, let's dive in. Okay, so you all know, unless it's your first time, how we kind of run through this. We talk about market stats in all of our key locations, kicking it off with Owensboro. Now, what happened last week? A little quiz for you. What happened last week that could have led to some low sales? Anybody have any ideas? Did we work Monday? Were banks open Monday? Title companies open Monday? No, right? So, and the reason that I want to point that out is as we go through these slides, you're going to see September 1st through the 6th, you can see we only had 16 sales for the week. So obviously that's not a true representation of where we're at, both in timing of the year, seasonality, and things along those lines. So I'm going to go through these slides really fast because, not really, really fast, like I'll make sure I explain them, but I just want you all to know that I am not looking at this week as an indication of any type of downturn in the market. I just want to say that right now. I don't, because the numbers are not good last week as far as closed sales, things along those lines. But we fully expect them to bounce back, and I got a bunch of articles that we're going to talk about that kind of goes along those lines. But you can see here we had 16 listings sold, 67 is our average days on market. That's actually dipped down a little bit, and we think that part of the reason that that has dipped down is because we're starting to see some renewed buyer activity, and listening to what y'all have put together as far as pendings and things along those lines.
Matt, can I
hopefully indicates that.
I'm just not following when you're, and forgive me, I don't want to, I see down here at the bottom.
Yeah. So we're always going over the bottom line right here. Yep. Sorry, I should explain that. One of the things that we're looking at in every market is the active listings, and you can see right now we got up in the mid 280s, 290s, then dropped down to 276. Not a big significant drop, but it is a drop. So what I'm going to continue to monitor over the next, say, month or so is, does this number continue to go down, which means we've ended the summer selling season and getting into winter seasonality, or is it that we're getting an increase in buyer activity? My hope is, and all of our hope, of course, is that we're getting an increase in buyer activity and they're snatching up some of the inventory, which would be really good for housing appreciation and some other things along those lines. Not big significant changes in days on market. You can see we're right around the same as far as right around 60 days on market for our active listings. And then median and average price, again, not big changes in there, still floating around 280 for the median, and then about, it varies from month to month, but I'd say overall year average right around 310 to 315 for the Owensboro area. Then if we jump over to Elizabethtown, same thing. You can see only 60 sales recorded. We normally record somewhere around 125 sales in any given week, so we expect a big bounce back this week. Average days on market coming in at 84. That's the lowest average days on market that we've seen. Again, very small snapshot, so we're not going to look into it too much, but just want to note it does look like average days on markets are coming down for E-Town. Next thing we're looking at is inventory. Inventory continues to rise. However, it did drop for the first time that since we've been doing these classes, really the first true time we've seen a drop in E-Town inventory. We'll see if that holds true over the course of the next week, because I know a bunch of people maybe didn't list stuff last week and it's going to be hitting the market this week just due to holidays and things along those lines. Then looking over at our Louisville market. So, first of all, did I hit record on this? Let me make sure. Yeah, I did. Okay. Because I get in trouble if I don't hit record. And as you know, Eric, just so you know, we send all of this out as both the recording and the slideshow, so you can use them for what you need. Then looking at the Louisville market again, 1/10 of the sales that we normally have, short week. Days on market staying the same in the upper 20s. Looking at inventory, it continues to climb. And I want to point this out real quick that since May, they have over 500 more homes listed. And these are just residential numbers. This is not taking into account commercial and things along those lines. So just so you know. And then average days on market for active listings is staying the same right around the mid 60s. And then looking at our Evansville market, 335 sales, 335 sales, excuse me. Again, about 10% of what we normally see in a month. Typically after the first week, we want to see 25%. Same story, just a different market. Average days on market is continuing to come down there. Part of that is due to the inventory constraints. And looking at here, we did have a slight uptick over the last, call it, month in inventory. It just continues to rise. I mean, if you look back in March, it's 715 all the way up to almost 1,000 listings for sale. So in our bigger markets, and when I say bigger markets, understand I'm talking Louisville, I'm talking Evansville, inventory is going up and sales tend to be going down. I mean, we're kind of just seeing that right now. In our smaller, more rural markets, and in this case, I'm talking Owensboro, I'm talking Henderson, I'm talking even E-Town, then we're starting to see inventory go up, but not as fast as what we're seeing in some markets. We're actually seeing inventory go down a little bit. So what does all of this mean and why is it happening? Well, it's the second week of the month, so you know we like to focus on mortgage rates. So what I have on your screen right now is the mortgage rates from last week. You can see a 30-year fixed, which is in your top left-hand corner, is 6.43. FHA and VA, which are our other two main loan types, coming in right around 5.8. And then if we look till last week, before I flip this over, does anybody think rates went up or down? Somebody take a guess. Down? You would be right. They did. So rates went down to 6.25 on a conventional. That's about 1/4 point difference. And then FHA and VA right around 5.7. So right at 1/10 of a point has come down from there. So why are rates coming down? Well, we're gonna talk a lot about it here in a minute, but there is something happening in September. It's either 16th and 17th or 17th and 18th. I need to look at a calendar, but that's when the Fed next meeting is. And if you've listened to me talk or paid attention to the news at all, you know they're expecting at least 1/4 point interest rate. As a matter of fact, we're going to talk about this next week. There's a lot of economists who are saying we got an outside chance at a 1/2 point decrease. If that happens, as you're going to see here in a second, that means we could potentially pop the lid off this thing in terms of buyers and people getting more active into the market. Because I want to fast forward to some news articles, but does everybody think, in comparison to where we've been over the last couple of years, does everybody feel like these are pretty good rates? Yeah. If you were to ask the average consumer if they think they're good rates, what would they say? Still need to go down more. Yep, you're spot on. So it's interesting just to see what we think versus what other people think. So there's actually a survey. You can see this news article. I pulled the headline and a little summary on the right-hand side. But Fannie Mae, who of course is the lender, literally the biggest lender, that only 1 in 5 consumers thought August was a good time to buy a home. Yet at the same time, in August, interest rates went down by almost a full point. Right? So it is trending in the right direction and it's trending towards what we like to see. However, overall, if you talk to 5 people, only 1 person thinks it's a really good mortgage rate right now. So we're still overcoming that hurdle. And this goes back to, and I've talked to some of you individually about this, but I think we're getting into this holding pattern where everybody knows rates are about to drop. I mean, if you open up any type of mortgage, economy, news source, anything along those lines, that's all you hear is Fed's going to drop rates. The only question is how many times between now and the end of the year. My best guess is they'll do 2 1/4 points, 1 in September and probably 1 in December, which is going to get us down. Keep in mind, it doesn't directly line up with mortgages, but that should get us down probably not a full 1/2 point, but probably maybe like 0.3. Or something on rates. So just my prediction. But the buyers are sitting here and thinking, Well, if rates are going to go down, why would I buy right now? I'm going to wait 30, 60 days and then come in and buy. I just want you to know what to be prepared for in terms of objections for any buyer wants and needs that you do over the next 60 days. You're probably going to get asked the question, what do you think is going to happen to rates and should I buy? Now, this is a general open conversation, and if you're online, just come off mute and speak up if you like. What would you say to a buyer who says, "Oh, I'm going to wait till after the first year to buy because mortgage rates are going to go down"?
Just literally a conversation I had yesterday
Okay.
while I was printing stuff off. But I did tell him that home price is steady going up. So by the time he does buy, the rates may be lower, but the house is going to probably be a little more expensive. So he may not save as much as he thinks.
Yep. That's very good and very true because appreciation, excuse me, I almost said affordability. Appreciation has continued to grow. Who else has got something?
Home prices will increase with rates going down.
Yep. Home prices will increase with rates going down. Absolutely. Jason.
I-
Yes, that's what I was looking for too. Yeah.
More buyers are gonna enter the market, so there's gonna be multiple offers.
Right. So what happens, and let's just like wave our magic wand real quick. And what happens if interest rates all of a sudden, no matter what the loan product is, all hit 5%? What do you think happens? Every home that is on the market is probably going pending in the next 30 days after that, right? So if that happens, then we'll have better chance of multiple offers. And in our local markets and in Kentucky, the average price increase in a multiple offer situation over the past 2 years, I'm going back a little bit because I'm talking pandemic level inventory, if this happens, is $10,000 over asking. So the question that you could pose to your buyer is, first of all, I calculate the difference in mortgage payments. Hey, if the interest rates do drop by, let's say, 0.5%, here's the difference in your payment. Now, here's the question, Mr. and Miss Seller, Mr. and Miss Buyer. Are you willing to risk potentially paying $10,000 to $15,000 more for a house in order to save X number of dollars per month? And as we get into this and look at it, and I think it's the next, I'm going to skip 2 slides. Right here, as you can see, just on average, each quarter point mortgage rate reduction reduces the mortgage payment by around $60. That's for an average price home. Now, understand this is national level stat before you post this. National level stat. We're talking $450,000 homes using this number. So just FYI, you might want to run the numbers. Just use your mortgage calculator on your phone. Do it for a $200,000 or $250,000 house. And last time I ran it, I think it was like a $75 difference total. So obviously it'll determine, is your buyer monthly payment driven? Are they down payment driven? Like what's their unique financial situation to determine for you to advise them the best route? But just know that the longer we wait for mortgage rates to go down and hope to save money on rates, the better chance we're going to pay more for that house, right? Everybody understand that? Any questions, comments on that? Yep. Let's go back on keyboard. So what's causing all the rates to go down? Well, it's all has to do with the job reports, and I'm not going to bore you with all the details, but basically, non-farm payroll came out and said that there were 142 new jobs last month. Well, what actually happened is that was an inaccurate number. I don't know how, can't explain why, I haven't dove into that yet, but it actually was 100,000 less than what they thought after they did the revision. So that's just a really good sign. We're going to talk, of course, week 3, we talk economy. So next week, we're going to take a deeper dive into this, but just know all signs are pointing to the economy's getting weaker, right? Which means the Fed is going to change those rates. So just to reiterate what we've already been talking about. And then right here, this one is, what's the magic number for in terms of mortgage rate that would compel you to make a home? So I can't remember who it was. Somebody did a survey of pretty significant amount of people and basically just asked them and said, hey, these are people who were looking to buy but weren't like, I have to move. Not super motivated, but were like, the right situation, I would move. And you can see here that over 42% said it needs to be at 5%. Another 26% said 4%. So just know, like in terms of our markets, like really taking off. And in 2025, we expect, so if y'all remember, let me back up a little bit. If anybody remembers, we did roughly 4 million home sales across the nation last year. We're on target to be just under that this year, probably like 3.9. We might hit right at 4, probably going to be very similar to last year. Next year, based on this data that came out as part of this, they're already projecting 5 million sales, which is pretty significant, right? Who wants a 20% increase in the number of homes they sell over the next year? We all do, right? Well, okay, sorry, I'm gonna speak to this half of the room because they like money. So, but all joking aside, and in 2026, they expect it to potentially go up another 500,000. So by 2026, we could be back in that 5.5 to 6 million home sales range, which brings us to pandemic levels. So in order for that to happen, a couple things. Obviously, mortgage rates need to continue to go down and start to hit some of these numbers that are shown on this graph. But most importantly, we got to go out and find homes for sale. And that's where I want your focus in the fourth quarter and the first quarter of next year is go find the listings. Because if everything trends the way that we're seeing it trend, next spring, the lid could finally pop off this thing. I think if you've been with me for a while, you know we've been waiting on that for about 2 years, right? For the lid to pop. There's a really good chance it happens in the spring. So if that is the case, then the agents who have the most listings are gonna win, because everything, not only from a standpoint of a listing's a paycheck, right? Because we know we're gonna eventually sell it. But also on top of that, with all the new rules changes, there's a decent chance sign calls go up, probably tenfold over the course of the next year, where people who don't have buyer representation just reach straight out to the listing agent. That creates opportunities in dual agency and things along those lines as well. So I really want y'all to, in your lead gen, I'm not saying completely avoid buyers, please don't hear that, but focus on sellers, whether that's old expireds for sell by owners, whether that's diving through and farming neighborhoods, door knocking. Put yourself in front of people who could potentially sell and build your pipelines between now and spring. You have 6 months before this thing all potentially pops, and to put yourself in the best position to make 2025 the best year that you've ever had in real estate. Okay, everybody with me? So what are we gonna go get? Listings. Yeah, okay, love that. And then a couple other news things, and then we'll wrap up for the day. Builders, these are just headlines that I pulled out. Builders are optimistic about the need and the demand for new housing. So I've talked to a couple of our local builders, and we have some both in Owensboro and Elizabethtown. I talked to builders in both locations, and they all have new projects starting. Now, they wouldn't give me any details on it because, you know, they're gonna keep that close to the chest, but there's at least 2 new areas in E-Town that are looking to be developed and 1 in Owensboro. So we're gonna have some new housing startups. That always helps with the inventory. Prices are tied to local markets, not to national averages. This is one thing that I think, especially for us being in Kentucky and being a little bit rural in Kentucky where we live, for most of us at least, just know if you start to see headlines of 10% reduction in Miami or 10% reduction in Tampa or whatever in terms of home prices, that doesn't apply to us. And what do we always want to be? We always want to be the local economist of choice when it comes to real estate, right? So I'll continue as we dive into next week's economics and stuff like that. I'll pull our actual appreciation numbers, but what you'll see in every single one of our markets, we're at least even or appreciating. We're not actually going down. So just pay attention to those national headlines and I guess rebuke those as much as you possibly can, especially through social media and stuff like that. And then here's where I was talking about 2025 and 2026. You see here one of the Fed economists who specializes in housing predicts 2 Fed rate cuts, the volume next year going north of 5 million. Then in 2026, if nothing else changes, hitting the high 5 million range. So that's what I was talking about just a little bit ago. So it's looking like we're finally on the cusp of this. Interest rates are starting to become more affordable. The question is, and this is just my opinion, but the question is, if interest rates get too low, does house appreciation grow at the rate that housing's still too unaffordable for the average American, right? That's going to be our potential limiting factor inside of all of this. So just pay attention to that, and of course, I'll keep you updated as we always do. So before we break, any questions, comments? Anybody online have any questions, or anybody in person? Okay, I did check for broker opens, didn't see any this morning. Did anybody see any broker opens that I might have missed? No broker opens today? Okay, I didn't think so. All right, well, we're good to go. Next week, we will be back on our donut diets. I'm the only one in the office today, and so I didn't have time to go get donuts. I'm just gonna go ahead and tell you, I apologize. But we'll have them back next week. All right, y'all have a great day. Let me know if you need anything.